Stocks falling today. That makes 3 sessions in a row, even as we got some better than expected economic data. But as Emily just told us, that shutdown is hanging out there. So will this pullback grow into something larger, or is this just a temporary blip? BD8 Capital Partners CEO Barbara Duran and Charles Schwab Senior Investment Strategist Kevin Gordon join us now to discuss. It's great to have you both here. Barb, I will start with you. Wall of worry, do you see this as just kind of boilerplate consolidation for a market that's had a torrid run and is looking pretty expensive here, or the start of something larger in terms of a pullback?
Yeah, Morgan, I think it's boilerplate. I mean, we've seen this before when the market's had a big run, and certainly I would not have been surprised if we'd had a pullback a few weeks ago because the valuation has been stretched. We are now at 23.6 or zero point 0.7 valuation on next year's earnings. So the market is incorporating a lot. Its earnings at somewhere at 13 to 14% next year. They're projecting the Fed will continue to cut, although I think that is an issue given the economic strength that we saw in the jobless claims this morning, which, as Rick pointed out earlier, will make the Fed question, well, how weak is the labor market? So, but I think it's a blip given the earnings support, and I think all the AI infrastructure activity, and certainly this week we had a number of deals announced, particularly around open AI, billions and billions, with some estimates that we could be spending, or could be $7 trillion spent by 2030 on these kind of infrastructure. So I think that gets investors excited about the potential earnings and the productivity increases we're going to see. So I think this is going to be a buy on any pullback, situation. And certainly we have not even seen 2% pullbacks in the S&P since April.
Yeah. And that's a good point. The final GDP number, Q2 GDP number, Kevin, much stronger than expected. Stronger consumer spending, which seems to be the headline from the report we got this morning. If I look at your notes, you talk about the stock market as the next big economic driver. Let's break it down.
Yeah, I mean, a lot of that comes from, the most recent data that we've gotten from the Fed. As of the second quarter, you look at stocks as a percentage of household financial assets, then they rose to an all-time high, surpassing what we've seen in the past several years and surpassing what you saw, at the prior peak in March of 2000. So in and of itself, that's seen as somewhat of a worrisome signal. We're not necessarily in that camp. While we do think that, behaviorally, that does suggest that things are pretty stretched from a sentiment standpoint. But when you think about, the wealth effect being a bigger driver now because of that stock exposure, but you also layer on to that the weakness in the labor market, the fact that that has disproportionately hit people down the income and the wealth spectrum, a lot of the spending being increasingly driven by wealthier parts of cohorts of the economy, you can see how the market becomes a bigger driver of that. So I don't think that weakness today or this week necessarily means that we're going to start seeing weak economic data. I think you would need to see much more of a protracted sell-off, maybe not as much in terms of depth, but I think also in terms of duration, which in the post-pandemic era we really haven't seen in a bear market. So I think that will become, assuming it stays that way in terms of household exposure to equities, that probably becomes more of a significant economic driver over time.
Okay. Barb, what do you make of this relay race effect that we see among some of the big tech stocks? We see NVIDIA, Oracle cooling off a bit after they've run recently, but Apple picking it up and running. What does that tell you about the health of the market overall and tech?
Well, I think there's always concern when you see people piling in, are things going to get overbuilt when you've got every player coming in? Because we've seen this in other industries, other times, the pricing is so attractive, people rush in and before you know it, you're at overcapacity. But I think in this case, it really is different, that the market size is so huge because you're still seeing companies adopting, you're seeing sovereigns, it is just spreading. And as costs do come down and we do figure out the power energy needs and how to accommodate that, you will see it becoming much more widespread. And certainly you're starting to hear a lot of companies figuring it out, whether it's through their agenics, how to maximize the efficiency, the automation, the digitization in their companies. So I think this is such a big market that I think it really reflects on the size and the power and the duration of what lies ahead.